Hello, everybody. This is John Solomon with Cyber Club London, or CCL. CCL is a loose group of information security startup investors consisting of a large number of CISOs and other similarly experienced subject matter experts and professionals around the world. We invest in information security startups primarily, but not only early stage, with promising technologies and interesting go-to-market strategies. And this is the first in our series of videos showcasing the portfolio that CCL has decided to invest in to date. Today with me, I have Jacques Dahan, who's the Chief Revenue Officer of Cyvers. That's our latest investment, or latest bar one investment, actually. And Cyvers is a very, very intriguing company. They are involved in blockchain security and crypto security. It's not a topic that comes up very often, but obviously one, given a number of high-profile breaches and also vulnerabilities on the technical level last year, that's very relevant, and it's going to continue to be relevant over the next year and beyond. So Jacques, if you want to quickly introduce yourself, give an overview of Cyvers, what you do, why it's important, the floor is yours.
Sure. Thank you, John, for the introduction. Thank you for the opportunity. Hi, everyone. So I'm Jacques. I'm the Chief Revenue Officer, and I actually basically come from the blockchain industry. I've been in this industry since 2013, and prior to that, I've been working in the high-tech industry since the early 90s, participating to startup of the very early days of the internet, large companies as well, running businesses for companies such as Checkpoint, Checkmarks as well in Israel. So basically my background is cybersecurity, blockchain security, and mainly coming from the business. I lived in different parts of the world, spent some time in the US, spent some time in Italy, spent some time in the UK, spent some time in Israel, and right now I'm based in Germany.
So can you tell us a little bit about Cyvers? What's the offering? What's the objective? What do you guys do? And why is it cool?
Yeah, all right. So in a nutshell, Cyvers is an Israeli startup. We raised $8 million. We are backed up by VCs. And we started to develop a platform back in early 2022. So we spent the entire year of 2022 to propose a monitoring service to detect suspicious activities in real time for crypto transactions of all kind. Now, why is it important that Cyvers propose this kind of service? I'll tell you what. If you go back to the very early days of the blockchain security, which companies were the first blockchain security? It started back in 2014 with what we call the blockchain analytic companies, the Chainalysis of the world, the CipherTrace of the world, the Elliptic. And these guys, what they are doing, and they do it very well, is basically help all of the crypto ecosystem, whether it's an exchange, whether it's a DeFi app, whether it's a bank or financial institution, they help the entire ecosystem to be compliant with regulations. As you know, as soon as you deal with money, you have to be compliant, you have to know and fight against criminal activities, and therefore you need to know who is the sender, who is the receiver, and comply with what we call the anti-money laundering regulations. So this is the first generation of company. Now, if you pay attention to what they do, they basically help investigators, they help financial intelligence units, they help law enforcement agencies to track criminal activity, meaning the criminal activity already happened. So if you want to recover your funds, at least have a chance. If you want to prosecute the criminals, fine. But if you are an exchange, or if you are a bank, or if you are a DeFi app, you lost your assets. It's too late. They're not going to help you protecting your assets before the crime is happening, right? So this is the first category of blockchain security companies. Then came in 2019, 2018, a second generation of blockchain security companies. We call them the smart contract auditing firms. They are 100% focusing on the DeFi sector. So companies that develop smart contracts to run an exchange without an order book, for example. Everything is without intermediary. Now, the thing is that those smart contract auditing firms are very good in understanding, assessing, identifying potential vulnerabilities in the code. So we're talking about pre-deployment. Again, if it's pre-deployment, once the application is live, how do you protect from an attack that is about to happen or is happening in real time? And for your information, we have a research center. We published, by the way, a 2023 Web3 security report, which has been pretty much covered by the press. And what have we found out? First
Just
of all, we found out
comment.
that
I'll link to that report in the video information if you can send me the URL.
yeah, absolutely. But what did we find out? We found out that most of the time, the operators of a decentralized application doesn't even know that he's under attack in real time. So if he doesn't know, then there's a high chance that they're going to lose their assets. So we looked at the security picture, all right, with blockchain analytic companies that help law enforcement after the fact, the smart contract auditing firms for pre-deployment. And we also saw recently some other companies that are proposing some sort of real-time monitoring, but what they don't do is what we do. And what do we do and why our solution is cool? First of all, unlike pretty much every other security company, we are monitoring in real time and we are focusing on a very important phase of a criminal attack. To cut a long story short, it's admitted that we can break down the criminal activities in 3 stages. The preparation phase, when criminals are putting the pieces of a puzzle together to prepare the attack, right? Then once the attack is ready, they launch their attack. So we are getting into the second phase of the attack, which is the exploitation phase. And once they are successful, they stole all of the assets, because most of the case, they don't even know that they're under attack. Then they move on to the next phase, which is the last phase, the third phase, the laundering phase, moving away from the location of the crime, trying to, of course, move their stolen assets and convert them into legal assets. So we are talking about laundering phase. Now, we are focusing on the preparation phase, and we are the only ones to do that. Why? We believe that it's better to stop an attack before it happens. We don't want to wait until they initiate their attack, because it goes so fast. We're talking about milliseconds. So we need to react fast. We need to even be proactive. And that's what we do. And that's why we're cool, because we are giving us the maximum chances to stop the attack because of our positioning. We go there in their kitchen when the criminals are, preparing the attack. And in the kitchen, we stop everything before they get out of the kitchen or the garage or wherever they are preparing the attack. Does that make sense?
Yeah, absolutely. So what's your target demographic? Are we talking your target customer demographic? Are we talking crypto exchanges, traditional finance operators converting to crypto?
Yeah,
what are we looking at?
So basically, to make it simple, we have 2 categories of potential customers. First category is what we call the CFI, centralized finance. In the centralized finance, we're going to find banks, financial institutions, centralized exchanges like Coinbase, Kraken, that basically need to protect the wallet where the assets sit. They enable fast trading, and in order to do that, the assets are sitting on what we call a hot wallet. The hot wallet is connected to the internet and therefore is open, is exposed, and we protect them in real time. That's the first category of customers, CFI. The second one are the DeFi, the decentralized finance, where we find, hundreds of different applications. But the most important categories are, or the most significant are, decentralized exchanges, lending platforms, liquidity providing platform, or staking services. The difference is that with DeFi, everything is automated through smart contracts, right? So smart contracts, for some who don't know, are basically ways to put logic into code. If I do that, then you will do this. And once you will have done that, then this is what's going to happen. So all the smart contracts, for example, are used, for instance, to provide liquidity for an exchange. You know that liquidity is key, right? So instead of having an order book, instead of having, liquidity providers, then you automate all of these functions through smart contracts. But smart contracts are vulnerable. For your information, all the decentralized applications that were victims of hacks, and by the way, the majority of the 2022 hacks happened in the DeFi world through what we call cross-chain bridges, and I will explain that later if necessary. But my point is that 98% of the victims of the hacks went through a smart contract auditing firms. So it's not good enough to run an audit. And it's not good enough, of course, to run a blockchain analytics AML software, because that's not going to help protecting the assets in real time.
Excellent. I suspect strongly that with the rise, given the fact that traditional finance is increasingly subject to regulations like DORA in the financial sector in Europe, that especially given the fact that the European Commission and others with examples of regulatory frameworks like MiCA have the crypto industry in their sights increasingly. I think the idea of various types of risk management tools like Cyvers are going to become much more prominent and also expected. Regarding the attacks, I'm actually going to link to another video we're going to do together with Jacques for another organization I'm a member of, where we go into some of the attacks, logistics, concerns in more technical detail. For now, I also want to mention that especially your mention of crypto lending platforms is extremely interesting, given another organization that we're working with called the Crypto Credit Association, a fairly new group for the crypto lending industry. I'll link to that below as well. So I think the market potential for this is enormous and highly promising. Last question before we wrap up, maybe, what's next?
So what's next? So for Cyvers, I guess you ask, right?
Yep.
All right. So what's next? Basically, we built the platform in 2022. We are already in the expansion phase in terms of grabbing market share. So we have very, very positive feedback from hundreds of companies that listen to our positioning. A good portion of them are testing our service, and we are developing a pipeline of deals. And next is to become the worldwide leader. I mean, we want to be the number one in this world. And you've mentioned, John, and you were absolutely right, the regulatory framework. And we all know how important it is. Just a few things. If you remember back in August of 2022, there were a few statements after, some of the major,
We won't name any names.
Cases. Yeah, we all heard about the bad things that happened. But the point is, we need more regulations. We need to make sure that investors, consumers feel protected. That is for sure. Now, the statements from the FBI, for example, or statements from the SEC chairman, Gary Gensler, goes into our direction. What they said in a nutshell, the ecosystem, the crypto ecosystem, needs more real-time monitoring to identify suspicious activity, to be more proactive. That's going to be the next phase. And I'll tell you what, when the regulators start to impose and set recommendations to the entire crypto ecosystem or banks, financial institutions, and by the way, 70% of financial institutions want to propose a crypto trading desk. So we're going to get to the massive adoption. But when regulators set recommendations to have a real-time solution, this is going to be a business driver where Cyvers will benefit the first, because we are the first one. I don't have time to go into the details why. Our infrastructure, combination of extraction of millions of information, our machine learning algorithms, the way we organized all of that, the founders, where they come from, with their experience, the technology, the engineering background, we are in the best position to become the number one worldwide.
Excellent. We are all supporting you very, very strongly, especially I think, given the fact that the regulators want stability, predictability, you're in a perfect position to help provide that. So I wish you the best of luck. And with
Thank
that,
you.
I just want to thank you very much. Stick around. We'll put this up on our playlist of CCL Showcase videos. Please visit Cyvers at cyvers.ai. Jacques Dahan, the CEO, and their team, they're very, very motivated, very knowledgeable, very enthusiastic. And of course, we at CCL, we support you 100%. Thanks very much for your time, Jacques.
Thank you, John, and thank you for listening.
Anytime.
Bye-bye.